Welcome back. Now, the Indian rupee has been the worst performing Asian currency in 2026, with a 5.5% fall in its value since the conflict began on 28th February. Monday was the fifth consecutive trade session in which it reached a record low. Now, the Indian rupee weakened to a record low of 96.2 against the United States dollar amid elevated global oil prices and economic headwinds caused by the conflict in West Asia. The previous low was 96.14, reached on Friday. Now, the internal deliberations among policymakers in Delhi and Mumbai over the last few weeks have underlined the counter effects of artificial stabilisation of the rupee that preceded the slide that began in 2025. My colleague Karthik Malhotra joining me live right now to tell us more about the story. Well, Karthik, I want to begin by asking, of course, we understand the impact of the West Asia war that India and the world over, all of the nations are feeling. But essentially, what does it mean? Does it mean that rupee is weak because America is strong or because India is struggling somewhere?
No, I think what it means is pretty obvious, Yame, and that's the fact that it is the petrodollar once again, which is the big sort of question mark on currencies across the world. And India, the fact that India imports about 85 to 88% of all its energy needs. As soon as you see any spike in crude oil prices, you are eventually using Indian rupees. You're selling Indian rupees to buy dollars, and then you're paying dollars to buy that energy. So the fact is that even this morning, Brent is trading at about $110 a barrel. In fact, inching closer to $111 a barrel. So the point is that you still need to satisfy and satiate your energy needs. And for that, you need oil, and crude oil particularly coming from West Asia. And that crude oil is expensive. So every time the price goes up, your demand for dollars increases, and you end up buying those dollars by selling Indian rupees, and that is adding pressure to the Indian rupee, which, as you said, is trading at about 96.20 this morning.
But Karthik, what does this mean essentially for a layperson when we are talking about the artificial stabilization of the rupee that preceded the slide that began in 2025? Are we reeling under that impact?
No, so actually, the appreciation was engineered by the central bank, by the Reserve Bank of India, and there are multiple tools in the kitty of the RBI to keep the rupee stable. So at one point, if you remember last year, the government had decided to go, in fact, early this year, not last year, the Reserve Bank of India had decided to put some sort of a cap as much as $100 million on net open positions of banks. So this was primarily done to ensure that in the futures and options market, there is no speculative trade happening against the Indian rupee. So that was one of the moves that the RBI had initiated. Then, of course, there is also this larger sort of issue that India is facing right now with inflation likely to hit Indian shores. The margin outlook for corporate India not looking very good. It's all sort of, moving into a direction that FIIs are continuously pulling money out of the Indian markets. So you're seeing an impact on the stock markets. You're seeing RBI doing some sort of an artificial process orientation to keep the rupee's decline under check for some, for as long as it can afford to do that. And one of those was the sort of, artificial appreciation, which was done by keeping that price ceiling and restricting the net open positions by banks to avoid speculative trading in the F&O space. But beyond that, again, I mean, the RBI does have options, and these are going to be aggressive options. For example, selling more of India's Forex reserves. The RBI has already, over the course of 2025 and 2026, sold as much as $100 billion worth of its Forex reserves, which are held in the US dollar denominated currency. So these are obviously, rainy day reserves which have been created over decades and shelling them. And India is now down to below $700 billion. So just selling the dollar reserves that you have is not actually the most prudent thing to do as far as monetary policy goes. Now, you also mentioned, Samya, and that's an important point, that the Indian rupee is in fact the worst hit currency globally this calendar year. The Indian rupee is down more than 5%, in fact 5.5% or so if numbers serve me right. And that's also because India doesn't have something that the world needs to buy from India. Of course, there are things that India sells which the world wants to buy, but the difference between wants and needs is what is actually holding foreign sort of buyers back right now. given the fact that we don't have an AI play, we don't have a very robust semiconductor play at the moment, and of course we don't have oil. These are essentials and these are drivers of industry which are working in favor of course, the West Asian countries, but also in favor of China, also in favor of South Korea, also in favor of Taiwan and Japan. And these are not the advantages that India has. And as a result, because this play seems to be missing from the corporate India story, there isn't really in it for foreign investors to flock back to India.
Absolutely, Karthik. Thank you for getting us all those details and for your insights. We shall leave it at that for the moment.